Okay, let's start by taking a look at the Bitcoin chart. So first of all, Bitcoin broke all-time high again. Look at this candle over here. You can see this was the high, and today we printed a fresh all-time high. So that's really exciting. I think a lot of you were in the Birb nest and in the bottom calls from crypto Birb, but also like I talked a lot about this 100 moving average here, which was support, and after that there was a big rally up. So congratulations to those who played this with us, and I think this was such a good play. It's now at 62%. That's what we're here for. You know, the big gains in crypto. It still feels a little bit unreal, but this is what we like to see. And I think after Bitcoin breaks an all-time high, there is always a good chance that, you know, it doesn't really break that all-time high by a few thousand. It continues and it probably goes much higher. Of course, the first target many have is 100K. I think I saw a few models that also predict somewhere between 180K and 250K. And that would be even more insane. But the best thing is how we can find a good entry for a Bitcoin trade if you missed these lower levels. So what you want to do is zoom in and try to find a good level of for buying, whether it's higher or lower. That's what you have to consider over time, because people always want to see a pullback, but often Bitcoin just goes sideways or maybe only has a slight pullback and then goes up. So the question is, how can we judge when to buy a pullback or a consolidation? And that's where we have to zoom in. We have to zoom in to, for example, a 4-hour or a 1-hour chart to see how we can play this. And as you can see, for example, in this trend on 4-hour, Bitcoin respects these moving averages quite well. So what I have on the screen is the green one is the 10 EMA, the light blue one is the 20 EMA, this blue one is the equivalent of the 55 EMA, and the yellow one is the 100 EMA. And often on 4-hour, the 100 doesn't really get tested, especially not on a fast trending move. But really be careful when it breaks, because that's when trend breaks on Bitcoin. So I think one of the most simplest things to do on, for example, 4-hour chart is see where Bitcoin is stalling that rally a little bit, and then try to buy on these moving averages, because price often mean reversed. It goes back to a moving average, to the average, the mean, and from there it starts that momentum again. So that's like you see an example over here. You can see an example over here where it just goes sideways, taps into a moving average, and then continues the trend up. So the longer it goes sideways in a bullish trend, the more likely it's to, you know, it's some form of distribution or consolidation where price is trying to find buyers or sellers. And especially because the trend is up, there are probably more buyers and people to eager to get in. So you just look for a simple pattern like this, and then you can long, especially better to long at the bottom of the range at such a moving average, but you might not always get the best entry for that. So that's one alternative. What we also often have is these shakeouts. So what you want to look for is where do maybe over-eager longs get stopped out. And I think you can see them better on 1 hour chart, because what people tend to do is they are so eager to get into Bitcoin, they over leverage themselves, and it's easy liquidity. When price goes down, they get liquidated or they get stopped out, whether it's spot or futures. And often those peaks are the best moments to go in. They look scary, but that's because it often is a red candle. So if you are afraid of that red candle, you can always wait for a green candle after that. But let me show you that. So here's a good example where there was another rally up, there was some sideways price action, and then price gets like pushed down below this range low, basically, and it creates this huge spike in volume. And that means that there are a lot of people selling, but also those sellers have to sell to someone who is buying. So there are also new players stepping in. And whether this is, price being pushed down to run some stops, so they are forced sellers, or these are shorters on the wrong side because they think it will break down. Sellers are on the wrong side here, and that's really important because these volume spikes give you that moment where you can see, okay, at these levels, a lot of volume is being transacted, and there is an interest of new players to get in where others want to get out. And maybe they don't want to get out, but maybe they are forced to be stopped out. So especially when you see a big green candle after that, that's, I think, where you could also just go long and at least ride an impulse move up, or go long and maybe place some stops below this candle. And as you can see, price continues the trend up until it starts to accelerate again. So that's another method you can apply. Look for big candles, especially if they are red candles and they get bought up quickly. So whether it's a wick, whether it's a big engulfing candle, look for that impulse, because that's where longs are aggressive and sellers are on the wrong side. So that's another alternative for this. Last alternative I want to show you, it's quite similar in how you want to look for an extreme of people getting stopped out or an extreme of selling pressure in a bullish trend. So the theory is that, a trend, it's better to assume that will keep going up and price will keep going up, but there will be some deviations down. And what you want to see is where are the sellers running out of steam. And I think a good indicator for that is the RSI. Let's make this better readable. And what you want to do is look for divergences on the RSI. And you don't want to trade against the trend, so don't start looking for bearish divergences. What you want to look for is bullish divergences, because these bullish divergences can give you like the ultimate entry in the trend. So for example, we have one over here where price is printing a lower low because it's based on the close. For the RSI, you don't consider the wicks, you consider the close. So it has a lower low on the chart, while the RSI is printing that higher high. The higher low in the chart. So this is that divergence, and as you can see, that was an ultimate, uh, like the ultimate bottom going from here. But you can also just take a look at the RSI itself, whether it's on the 4-hour or the 1-hour. Extremes in RSI, as you can see here, are a good moment to buy the dip. And you can combine that information where maybe the RSI is oversold heavily, plus that big volume spike. You might get in a little bit too early, but still it is a good entry if you can ride it up like that or ride it up like this. So I think that's a good good tactic too. And I want to show you that you can also apply that on the 4-hour by looking at these extremes, but we haven't had a moment like that in this run up. So I think there were some moments in this run up at the start of 2021. I think one of those moments was over here or over here or over. Yeah, this is more of a divergence, to be honest, the last one. But they provide good opportunities to buy a dip on a higher time frame, even during these bigger corrections. And as we go back a little bit further over here, you can see that the 4-hour also like some kind of divergence here. Same here. Gives you that absolutely like great bottom signal. So that's why I don't want to give levels for a pullback. You can just read it from the chart when it happens, because you'll never know if it bottoms over here or just lower or even lower. What you want to see is that momentum from the sellers being exhausted and then the buyers taking over. So the RSI divergence over here, for example, let's zoom in a little bit, indicates that this last lag down was on lower momentum compared to this lag down. And then the buyers take over with a big green candle. So that confirms that the buyers are stepping in, and after that, the big run up happens. So if you want to study these examples yourself, just go to the previous run up from September 2020 to all the way 2021 January, but even further towards May over here, the May top, and look for examples on the 4-hour. Look at that RSI. Look if you can find extremes, if you can find divergences, see volume peaks, and do the same for a 1-hour chart. And you'll start to get some idea like when is a good moment to buy that dip. And you, as I just showed you, these are actually quite simple rules. Just buy, maybe have some patience to sit out at volatility. Of course, manage risk, know where you're wrong. But of course, that's where you have that stop loss in place, and you need to place that one correctly.